Was really good, was really good. We back at it again. Sorry for no video last Saturday. Just wasn't working out well. Today's video is what was going to be put up last Saturday, but the Saturday before last video was on market structure. In this video, we're going to be going over a new and improved, renovated, rebooted version of a video that I put out a couple of months ago on overall market analysis, which is still going to implement market structure overall, so then we can understand what we are looking for and what we are looking at and what we can expect the market to do in a certain direction, in a certain time frame, days, and etc., etc. And yeah, also another week gone, 90% win rate within the option signal. So if you ain't in the Discord, it's free signals as well. And my first 2 mentorship sessions are free as well. So go tap into those things, especially if you're new. There is no risk other than what you decide to create. All right. But let's get straight to it. All right. So what is market analysis? All right. Market analysis is analyzing the market using multiple time frames to understand the overall direction that price is going within a certain market within a certain time. Now, how do we define what the direction is? As traders, we define that overall direction in what's called trends. I apologize if you hear a freaking tractor or lawnmower outside, but we define the overall directions as trends. All right. And how we define those trends are they are either bullish trends or bearish trends. As we can see here on SPY, since Monday, the 30th of October, 2023, so about a year ago, we've been moving up, 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 up. We've had a couple of pullbacks, et cetera, et cetera. We can expect that because price isn't just going to move strictly upwards. It's going to pull back, obviously. But we've been in a very bullish trend since last year, all right? Well, since a year ago from this time frame about. And this is what we would call a bullish trend. So think of a bull picking you up by its horns. It's picking you up. Price is moving up, just like I mentioned in the market structure video. And then a bearish trend is when price is going to be moving in a sell side direction. So like right here, granted, this is a pullback, but this is just a quick little understanding of what a bearish trend is going to be. Is when price is heading downwards, just like this, creating lower highs than previous highs and lower lows than previous lows, as in a bullish trend is going to be higher lows than previous lows and higher highs than previous highs, and etc., etc. So now we understand what trends are, what define those trends, how to define those trends, and what market analysis is. All right. Now let's go into the time frames that we need to use, and what those time frames are specifically going to be used for. 1, 2, and 4 hour are going to be more on the market structure side, but still overall trying to make sure all the time frames are aligned, which I'll get into in a second. And then the 4 hour and the daily are going to be mainly used for overall direction that you should expect. And then the weekly and the monthly, that depends on what markets you trade, etc., etc. But we'll still go into that later in the video because it's not as important right now. All right, now a second ago, I just said the time frames all need to align. And by what I mean by that is because they all are the same, just spread out, essentially, the lower you drop the time frames, they all need to align, which means if the daily time frame is bullish and the 4 hour time frame needs to be bullish, then the 2 hour, 1 hour needs to be bullish, the 15-minute, 5-minute, they all need to be bullish, they all need to align. Now, depending on what market you trade, if you click on your watch list and you scroll down, it'll usually tell you right here with the technicals, you click more technicals, and it says, buy side. So the daily, it says it's on the buy side, 4 hours buy, 2 hour, 1 hour, 30-minute, 5-minute, 15-minute. It's all strong buy, strong buy. That means, okay, we're bullish. So you can easily do that. You ain't going to analyze the market. You can simply go to more technicals and it'll tell you. Or you can do it yourself. Regardless, it's going to be the same outcome. But essentially, you need to make sure that they're all aligned. Because if they are not all aligned, you will never know if you decide to get into a position and you are actually being caught in a retracement that is coming back upwards to an extension. By what I mean by that is you don't want to be just entering into a sell position right here because you see sell side pressure moving down. You think it's gonna seek the liquidity and the imbalance or whatever. You don't want to enter in a sell position here, not understanding what the overall direction is, and then guess what? You get caught in the pullback to that continuation to the buy side is what I mean. So if you don't understand, if you are not a fluctuable trader and you don't understand when to get in and get out when it comes to going against the trend, because you don't understand the market, that means that's going to be a lot more risky. Then that means chances are you're going to enter into a position when you shouldn't enter into a position. This is why you need to make sure all the time frames are aligned, because let's say the daily, 4 hour, 2 hour, 1 hour are all bullish and the 5 minute and 15 minute are bearish. Therefore, you enter into sell positions on the 5 minute time frame. Guess what? Boom, stopped out is essentially what I mean. All right. Going into that is overall trends. Again, the daily time frame, or no, sorry, the higher time frames, a pullback or a retracement is a overall trend in the lower time frames. Therefore, if the daily time frame is having, so let's say this pullback right here, all right? This is just simply a pullback for price trying to make a higher low than the previous high so it can continue in the bullish trend, all right? This looks like nothing crazy. It just looks like a slight retracement, but that's on a higher time frame, meaning this is multiple days that I ended up making this move. This slight retracement was an overall trend on the 5 minute time frame, on the lower time frames, all right? Meaning that we only need to be focused on really in the moment, all right? All we need to do is focus on in the moment. We don't really need to zoom out and look at previous history. Oh, we're bullish, bullish, bullish. We need to focus on right now in the moment. So let's say we were in, let's say it was, August, whatever, or within this time zone, this time frame. We see that price is making this, these big bearish candles to the south side. Guess what? We can expect sell positions, or we can wait for price to start showing bullishness and then continue riding up within that continuation. All right. Now, also earlier, I mentioned being fluctuable. I'm a fluctuable trader because I understand the market more and I'm more confident. I'm not so worrisome and et cetera within the trades that I take. And I understand what I'm looking at. I know what I'm looking for. I'm able to be a fluctuable trader, meaning it doesn't matter if the overall market is bullish or bearish. I'm still able to get into positions point blank period because I'm not greedy and I know when to get in and get out. If you go within the option signals, you'll see, before market opens, it says, oh, we're going to be looking to go long from this point. But then guess what? Market opens bearish. But guess what? Because I'm fluctuable, I'm able to adjust is what I mean. I'm able to adjust whenever price is doing the opposite of what is expected. Daily time frame. Guess what? We've been bullish for the past week. This whole week was bullish. We could have even dropped down to the weekly time frame and saw that. We've been bullish for the past 2 weeks, also hitting all-time highs. So guess what we can expect? Sell side. And we've been very bullish. If we look further back to around, let's just say within this area, again, still bullish, forming higher highs and higher lows. All right. And we already looked on the more technical things that said we were bullish, so we don't even really have to do all this. Guess what? Oh, we're still forming higher highs and higher lows. Great. And we do that throughout the every single time frame, essentially. All right. But I mainly use that for the daily and the 4 hour time frame. All right. So as we can see, we are still bullish. 2 hour time frame, we are still bullish, but now we're going to be focusing on more structure. All right. Obviously, we're going to be focusing on structure on every single time frame. But the reason why I like using the 2 hour and the 1 hour for trying to get a perfect view of overall structure instead of like the higher time frames is because it's more stretched out. On the daily time frame, all of these candles is one singular candle. Therefore, I don't realize that, oh, we have a higher low right here that can very much be broken because guess what? We formed a lower high right here. You feel what I'm saying? So that's why I use the lower time frames because it's more stretched out essentially. So after seeing that the 4 hour and daily time frame are bullish, obviously we're going to make sure everything else is bullish, but we're also going to be focusing on the structure. As we can see here within SPY or SPDR, S&P 500 ETF chest, if you want to use the entire name. All right. As we can see here, bullish still, obviously. Obviously, again, this is more stretched out instead of so condensed because it's a smaller time frame than the previous ones. But now looking at the structure, we have a higher high, a higher low, price pulled back, retested within this gap that was made within that day and formed a lower high. And guess what we saw on PayPal 2 weeks ago? Guess what we saw on Apple last week? And guess what I saw myself and told my Discord multiple times well before that PayPal move that gave us 500% within like 15 minutes of the market. Was based off of looking at every single other market I have in my watch list is every single time price has formed a higher high, a higher low, a lower high within the area, it always breaks, or if it continues to look like it's going to break that higher low, then it's going to sink all the way down. And guess what goes more into my confluences within that analysis of that overall structure is we hit all-time highs. Not only did we hit all-time highs, meaning there's no more liquidity above other than the new highest point up here. That's the only liquidity. But let's say price does go up to sweep that, okay? There's no more liquidity above other than what's newly made. It's not just going to keep going, pull back, woo. No, it's going to drop. That's why people short at the top. That's why they say sell high and buy low. Because guess what? When price hits all-time highs, there's no more liquidity or imbalance above. It's a blank canvas. Therefore, price has to sink all the way down to get all that money, sweep all that liquidity, make all that shmunyon before it can start heading back up. So not only do we know that that is more likely and most probable to happen after hitting all-time highs, we see the overall structure that we've seen based off of previous history and it working 100%. Had a 1 to 24 RR with that PayPal trade. I put it up right here, and I predicted that 3 to 4 days prior to it actually happening. Based off of all that analysis and all that structure, I know what I can expect and I know what I'm looking for. And guess what? That goes completely against the overall trend, which is bullish. But I know when I should be getting in and I know when I should be getting out. Therefore, I'm not worried about that. Then we're going to drop to the 1 hour time frame. Look at the same thing. Wow. It's more stretched out, so it's not that much different. But guess what? It looks the exact same like I've seen before. So I already know what I can expect. Then we're going to go to the 15 to 5 minute. I mainly only use the 5 minute. I don't really use the 15 minute other than more confluences when it comes to an overall trade in the direction. But I mainly chart up on the 5 minute time frame. I get better looking gaps and I get better looking supply and demand zones. And then when it comes to marking out liquidity, for the primary liquidity, daily 4 hour time frame, standard liquidity, 5 minute time frame. All right. And yeah. Finish all my weeks with an 80 to 100% win rate. I finished all my months on average with a 90% win rate overall. This is why. I know what I'm looking at. I'm confident. Most of all, God, praise the Lord. This is all from God, so I give all thanks and all praise to the Lord. But yeah. So being able to do this, being fluctuable, because I'm not so worrisome about my trades and not so scary, and understanding what I'm looking at. Implementing market analysis by using multiple time frames, but also implementing knowing how to use market structure. I have been able to, amongst many other things, mainly mental aspect related things, been able to build that consistent high win rate 24/7. Literally, you can go to my Discord, you can see everything. All the trades that I take are all the trades that I signal, and I post the end of week numbers overall, how many trades we've won, lost, and the win rate overall in a specific section all the way at the bottom of my Discord channel things. You can see it. That's just what I do, and I give all thanks and all praise to God because that's the only ultimate reason why. You feel me? But yeah, so this is basically what I do on a daily basis. I guess you could say a nightly basis because I do this at the end of every night, and this so that it's set up and ready for the next day when the market opens up again, etc., etc. And yeah, so again, use the higher time frames to overall get an understanding of the market structure and analysis and direction, and then use the lower time frames at the 5, 15 minute or lower, depending on your overall playing style, to enter in your trades and chart up your charts, essentially. All right. But yeah, so that's overall how to analyze the market, how to use those time frames, what time frames to use, what those time frames are specifically used for, how to be a flexible trader, and learning more about flexibility when it comes to taking trades. So again, just continue to learn more and get more screen time so you can become a flexible trader by understanding what you are doing. And yeah, God bless y'all. You can like, subscribe, go to the gram, whatever you want to do. Just trying to help some people out. I'll see y'all.